Hello there, many thanks for joining us today. It's about a time where we talk business. Glad to have you on the midweek edition of Your Business Nigeria. Here are some of the top stories we have for you today. The IMF projects Nigeria's growth for next year at 3.2% as FAC allocation rises by 18% in the month of June. And on the international front, we also see Google helping jittery stocks ahead of the Fed. On the interview segment on the show today, now our first conversation is going to stay with the global aviation sector and what's also playing out within the domestic market as we are assessing current challenges facing the growth prospects of the industry, which has already taken several hits. And on the second part of the show, we'll also be focusing on conversations around the fixed income market as we look at the performance of the equities as well as fixed income markets, treasury bills and bond markets amid all of the global headwinds which are playing out today. Welcome to the show. Let's now bring you up to speed with some news making the headlines across the country. We now start off with some revenue-related challenges, as with Nigeria's revenue not covering its debt service and obligations. In the first 4 months of this year, the International Monetary Fund has urged Nigeria and other Sub-Saharan African countries currently experiencing high external debt to take proactive measures to enable them escape debt default. The IMF, in its World Economic Outlook for this month, entitled Gloomy and More Uncertain, put Nigeria's growth for next year at 3.2%, an increase of about 0.1% compared to the 3.1% it projected in its April forecast. Now, retaining Nigeria's growth projections at 3.4% for this year, the Brentwoods institution notes that there is the need for countries such as Nigeria with high debt levels to take urgent proactive measures to restructure the debt to also evade default. Meanwhile, the chief economist and director of research department of the IMF, Pierre-Olivier Greenwich, has also maintained that as advanced economies, central banks raise interest rates to fight inflation, financial conditions worldwide will be much more tighter, as this would result in increase in borrowing cost, which will continue to put more pressure on domestic monetary policies of emerging markets and developing economies. And the Federation Account Allocation Committee says it has disbursed a total of 802.4 billion naira to the 3 tiers of government for last month. According to a statement by FAC, the federal, state and local governments shared allocations for the month of June, increasing by about 18% thereabout, with the increase hitting as much as 602 billion naira it disbursed in the month of May. The statement shows that the gross statutory revenue of 608.5 billion naira was distributed, from which the federal government was allocated a sum of 292.7 billion naira. States also got 148.5 billion naira, while local governments got 114.4 billion naira. As states entitled to the oil derivation also got 52.7 billion naira. The communique also shows that the gross revenue available from the value-added tax for last month was pegged at 193.8 billion naira. While the federal government got 29.07 billion naira, states received 96.9 billion naira, as local government councils also were given 67.8 billion naira. The communique further revealed that companies' income tax and petroleum profit tax reported significant increases, while import duty, oil and gas royalties also increased marginally as excise duties decreased significantly, while we also see the value-added tax decrease marginally. And now, as the current challenges facing the Nigerian aviation sector continues to worsen, the Minister of Aviation, Hadi Sirika, has announced that there are no immediate solutions to the crisis rocking Nigeria's aviation industry, as the variables impacting the crisis in the sector are beyond the nation's control. Addressing journalists after an emergency meeting with Airline Operators Association of Nigeria, the minister maintains that there are no short-term solutions, as the challenges involved are a global problem. According to him, the current energy crisis affecting flight disruption in the country is real and it is global, adding that the reason is part of being aggravated as part of the bigger issue around energy cost and energy volatility as a result of the Russia-Ukraine crisis. However, the minister maintains that government is in the process of finding some permanent solutions. Well, joining me now to discuss this and much more, I have aviation analyst and a member of the Aviation Roundtable, Mr. Olumide Onwayo. Thank you very much for joining us on the show this afternoon.
Thank you for having me.
What do you make of the Minister of Aviation had a Syracuse statement stating that there is no immediate solution in the short term to the crisis we have, which is rocking the aviation sector? We look at the price of Jet A1 fuel hitting as much as 800 to 900 price band from what we had just played back about 5 months ago. And then we also have statements from Senator Adeyemi also making reference to the fact that we have some individuals, wealthy Nigerians, who are taking this Jet A1 fuel out of the country illegally.
Well, I think the industry got the information from the minister today, same with the last time we talked about the Senate committee chairman with trepidation, and we're not happy with comments from the two leaders. Now, what the minister has said is no short-term solution, so we'll all have to go through this
Pain.
for the next 6-7 months, through this pain. Yourself, myself, travelers, with the high cost of the ticket. And for the Senate committee chair, saying that they smuggle aviation fuel to neighboring countries and nothing has been or nothing was done to stop.
Now that's responsible for the current scarcity.
For the current scarcity, and not having any culprits to be brought to book, smacks that were not ready to solve immediate problems. And because if these problems can be solved in the short term, then we have such short-term solution. If the Senate said they are smuggling this product in neighboring countries, if you block the smuggling route, then that's a short-term solution. Again, there are modular refineries within Nigeria that are looking for the crude oil and are not being allocated the crude oil. Probably we'll begin to look at them now and say, okay, can you people start out with Jet A1 refining? And if we can help those ones, then rather than wait for the turnaround of Port Harcourt or Kaduna refineries that we've all waited for all our lives since we've been growing up, and there's no solution. Again, the Dangote we're expecting, we are not yet sure of the date that Dangote is going to start. So I think we should first plug the holes for smuggling, ensure that the tonnage brought in is what is being sold in the Nigerian market. We must first block that. That is very important. It's a good information from the Senate committee. But then, what are we doing to monitor and ensure that this aviation fuel does not go through the border? Why should we discomfort ourselves and make other countries comfortable? So those are short-term solutions to me. And we should not just throw it. The minister should not pretend not to have heard the Senate committee chairman make that allegation. And that is very heavy, coming from the Senate committee chairman on aviation, that this fuel is being smuggled. So I think we should address that. Then we also should look at the middle of refineries that are in the country right now, who are waiting for crude supply. If we could discuss to them to start up with the aviation fuel, those are other short-term solutions. Then the third one is, the ministry should lead a team to the Central Bank of Nigeria, whereby that official window exchange rate would be opened for the importation of those products for the Nigerian airlines and any other activity that has to do with
because this is a heavily dollarized market.
Yes, exactly. And right now they have to go to the black market, and even in the black market there's no dollar. So that I think those are the three things that the minister can do for the industry now. Now we're two down now. It's to go.
So you don't buy the idea that there are no short-term solutions
No,
to mitigate the current
I do not buy
challenges.
If we can solve this, if we can take these three situations right now and just analyze, then we are talking about short-term solutions. Rather than wait for the refineries that we are not sure when the turnaround come in place, or then go to when it's going to start operation.
Let's talk about the airline operators of Nigeria, the conversation they've had with government in terms of driving a much more sustainable pricing model. Now, we know that it's difficult to have to operate at about 30-40% of your energy cost, and difficult at that time. Now we're looking at a price band which is affecting operational costs at about 70, 80, 90%. We see the likes of Aero Contractor also make mention of a temporary suspension of the flights. We also see the NTA also hitting hard down as well, just because of the audit they held of the airline. What do you make of the conversation line we've seen, the agenda push from the part of the airline operators to let the government understand really how much of a pinch the aviation sector is taken? Because if the picture is not clearly painted, it will be difficult to understand.
I think I need to commend the AON for the first time. They have been led and leading from the front, which has always been a problem with that organization. in the past, we've wondered, you have so much power and you're not using it. Now they're using it, they're communicating, they're negotiating, they're bringing their problems forward. Everybody's seeing it. So you cannot just say the airlines are not being human. Today, like you said, we have one airline going down voluntarily. That's aero contractors. Though these are scheduled operations, other arms of the business are operating.
Are still operating.
Then Dana, involuntary by the regulator. So we have 8 left. Now they've come up and said, okay, they've put our application forward to the NCA, asking for them to inform them that they will be increasing the fuel surcharge based on the distance, which will range between 40% and 25%, and asking the NCA not to tax that surcharge, but if they tax surcharge, the ticket fare will also increase. Now the ticket fare is going to increase. There's no hiding place for that.
No doubt at all.
It would have to increase to commensurate with the cost of fuel, and that they've done. And I think they're doing everything humanly possible to remain afloat, to ensure that the economy is still going on, and also that Nigerians can fly. You can still get some fare below 100,000. But if you walk to the counter on the day of travel, or when you travel on the peak days and hours, then you might probably have very extreme fare. So if you have to travel now, you need to plan your travel, choose the date, the time, and the period, so that you do not fall into those peak hours or days that have heavy traffic and pay those exorbitant fares.
It seems the situation is getting worse because we had the same old discussions earlier at the start of the year where we're making projections and forecasts. Right now, we're throwing all of those to the wind because we are not starting the half year in an excited mood. It's a lot of pain the industry has to face. But now, as we speak today now, do you think the traveling populace that understand that air travel is the safest means? You can travel by road or by rail safely. You have your heart literally in your mouth. Now we have to travel by air. How do you think the traveling populace would accept news of further increment?
Well, quite naturally, you expected a bit deep in passengers' employment initially, because people want to first absorb the shock as it is necessary to travel. But at the end of the day, when you look at our surroundings, look at the environment, we are being held down by the bandits on the road. We are held down by the rail. So Nigerians virtually have an alternative than to fly. So there'll be initial shock. There'll be that dip in employment. But sometime in the future, maybe about a month or two, the passengers will pick up. Again, our prayer should be maybe we have more airlines coming in, and for those who are operating, maybe they can get smaller aircraft that can help.
You just really touched into the next question I was going to ask, really now, the fate of new entrants. Now, we've also had conversations whether we're going to see airlines going down the drain, filing for bankruptcy or some merger. What do you think is the forecast we're also going to see as we're also looking at how things will play out for the year 2022, based on this heavy cost of aviation fuel and the Russia-Ukraine crisis lingering and continuing to exacerbate this pressure?
We started with 190 naira per litre this year, and today we are 900, or close to 900 naira per litre. We don't know where it's going to stop, but we're already predicting about 8,000 naira. What I see here is that you find that most of the big capacity aircraft might probably be backed. Aircraft that are wet leased would return. Some of the expatriates that's happened with Dana, some of the expatriates might have to go, so that airlines can reduce their cost of their cost of operation. And in doing that, we also expect that airlines should begin to talk to each other. You don't have to operate all your schedule. If you have an afternoon schedule,
and it's not to full capacity.
Full capacity, you can discuss with the sister airline to see how both of you can share that cost. And that's by putting the passengers there, and you get something rather than lose all through on that time of that route. So I expect some strong partnership within the airlines now. Big aircrafts being packed, the list, what list now being packed, and the expatriates too. So if the airlines can work on do some discussion, just as they're doing through their body now, they can let it translate into some commercial discussion among them. Then they may be able to swim through this heavy tide. Again, we're expecting ValueJet to join the fray any minute from now. But in aviation, every minute from now can be the next month. So if ValueJet can join, then you have more capacity to replace those lost through Aero and Dana. But Dana will definitely come back. Dana has that thick skin. They've gone through the worst part in the past, and they came back. And I expect Dana to come back. Luckily, it's economic and not on safety issue So the economy it's just something of getting their books and discussing with their banks and things would return for them.
And what do you think is the fate of the investing partners that we have with these airlines as well?
Well, where the times are not right in Nigeria right now. We're having a national elections coming up early next year. It's very difficult to begin to invest in anything without waiting for that election to come to pass. Coupled with the insecurity problem, the fluctuating naira, which is doing very badly when compared to other currencies, And today now the euro is falling to the dollar. The US is happy, but we are not getting anything from this. Our instead of catching up, it's just a free fall. And so I think if we're able to improve our monetary policy, if we're able to get this dollar available, and if we also meet our international commitment, what we have done to the foreign airlines now by not remitting their money, it's already affecting the international ticket fares. We're having the highest ticket fare between Europe and West Coast. It's the flight to Nigeria.
And those fares are going to go even higher.
Yeah, definitely, it will go higher. The difference is that they don't just go 50-70%. They might just do it every week, 2%, 5%, and you will not notice it. It's when you go there after about 4 weeks, that's increased. So that's it. They will have to increase it, and they will put it on the first surcharge.
And let's also talk about airfield lighting as well. Now, we've had a whole lot of kickback from the stakeholders within the aviation space that this is not the best time to have such an infrastructure development. Your thoughts on this?
Well, the stakeholders have complained about the timing. Why can't the work be done overnight, since it's within the airport vicinity and it's safe from the insecurity malaise that is known within the Nigerian sphere now. But the fund said, well, they had signed the project, and those contractors have asked for 2 months, but they said in no time of 3 months, in case the contractors cannot come in, cannot get the project done in 2 months. And the project has started. But yes, the industry players are saying, look, why do you have to lock that runway down for that period that we can have half of the day? But one has talked to his guys and said, well, we promise to manage the one runway available. But then that extra cost, and you know why they're complaining now is because of that taxing the aircraft from the international wing to the local wing where the local flights are operated. So that's extra fuel burnt in taxing is that extra cost that the airlines are looking at and saying, look, we need that the fund can help with having flights operating part of the day before closing down the runway. And I think, but I don't know, I know they're still trying to push that offer, but fans has talked to his government that runway is short for aviators.
And I'm doing now.
But we're eager to see the runway come out with the runway light. It's taken a long period, almost about 12 years now, that we've not had that runway light on that runway. And
we're all doing the analysis of the performance of the Minister of State for Aviation, Hadi Sirika, at this point in time now. This is really a tough time to have to maneuver through. He's doing his best, but a lot more is expected. In your assessment now, how would you rate the performance of the minister, the conversation lines that we've also had, and the projections for aviation looking at the second half of the year?
Well, the minister moved it from Minister of State to Minister of Aviation.
Yes, Minister of Aviation, yes.
Full minister. And we are here. If it's getting approval for projects within for the parastatals, yes, he has a knack of moving to the Federal Executive Council, pushing this paper. You won't even hear anything. You just hear them reel out the approval. Just like the one that was approved for the 2 airports recently, the one in the Port Harcourt, I think Port Harcourt and Enugu, for some equipment for the airport. It pushes his approval for projects, but I think the issue we have with him is that he has a roadmap, and barely on the last leg. The button has gone to the last player now, and there's none of the roadmap has come to fruition. And I don't see. But now with the coming elections, like we said before, people know that in this country, even if the same party wins, they hardly continue the same policy. You expect some investors to say, we'd rather wait for the elections to be over before we can continue discussions with you. And that's the kind of thing I expect to play out in some of those roadmap projects. that he has pushed towards the end, such as the national carrier and the concession of the airports.
You make mention of the national carrier and the concession of the airports, and these are two big conversations that we've not necessarily seen so much of an improvement in. The whole bidding process came up with some excitement, and then all of that just went down the drain as well. And the part where government continues to take one of the biggest actions, where lies the part of investors. We also have to look at the current state of the national carrier as well. With this whole crisis lingering for far too long, that agenda continues to move down the drain as well.
Yeah.
How do you think these two elements, which are some of the highlights or the shape-ups of the biggest successes for the minister for this year, will pan out?
I think right now the national carrier is being pushed about that self-promise rather than the national promise. Because if it's a national promise, you will know that this is not yet appropriate time for that because of all that is happening right now. But we've pushed it for about 7 years. I think you know that this is going to affect my legacy if I cannot push it through. But one thing is to push it through, push down the truth of everybody, and that's for us to see it move after May 2023 next year. Do we want to seek money for pride, or we want to rather wait and build and wait for that appropriate time for it to come? The process has started, but please don't rush it. Don't make it one of the things. You can hand over the project to the incoming minister or incoming government, but rather don't. I would not want them to see that it must be fulfilled before the end of the term, because that might just stamp it, add more to the woes of the airlines that are coming, and the one that we are bringing in, the new baby, might not even survive in fancy if we have to rush it, because it's very difficult to get investors now because of the existing climate insecurity, the elections coming up, and the sorry state of Naira that's supposed to be the major revenue earner for that airline. So it will be difficult. Again, on the concession of the airport, they just finished touring some countries to see how concessions have been done. They were able to get the unions on their side now because they took them on the tour too, and now they are happy. So we wait for the process, and as we march towards the last 6 months, I just hope they can expedite action on that, so that will stand before the election nearing heat comes into the equation. Again, the Abuja airport was once concession. Was once concession by President Obasanjo, and when President Yar'Adua came in, he reversed that concession. He reversed that concession, and because they just had about 3 or 4 months, it was done about 3 or 4 months before the new government. So we should be very careful we don't do the same line.
How much of a hit do you also think these domestic intricacies would also have when we are looking at establishing Nigeria as a regional hub? That also remains one of the bleakest promises we have to deal with, losing some of our operations and activities to the likes of Ghana and a whole lot more. To what extent do you think Ghana and other players within the West African corridor will leverage on this?
I think it's just, Dave, let's save ourselves. It's better we first come home. Let us solve our issues before start looking at. They are dreams, good dreams, no doubt. But there's these situations we found ourselves, the falling Naira, our inability to remit funds of the foreign airlines. They are all in the industry. All those affect, and it's affecting both insurance, security, negotiation, credibility.
Because we had the latest report from IMF as well, stressing the need
creditworthiness. And once IMF speaks, they copy almost every...
That's almost a dampener.
Yeah, yes. They just copy almost every organization within the industry. And when you begin to push anything out, everybody quickly refer you to that. So I think there's a need for us to first sit down. Let us solve all this problem. We can just continue to develop our domestic aviation. If new airlines are coming up, continue to do that, but don't start taking big. You will just, what will make my discourage us. So it's better we just continue to develop, maybe work on our infrastructure as they're doing right now, expand it, and prepare for that glorious time that will come, that we're expecting, but not at the moment.
And another issue we have to deal with, and the prospect being pushed aside to the backbencher, is any chance of us having a maintenance, repair, and overall facility in the country. That should also help reduce the cost of operations for domestic players.
I do not understand what is delaying that MRO in Nigeria. Organizations have come, the government have made so much plans, but up to this moment, none has shown that groundwork to begin work. All we see that, yes, we have met with them, they've agreed, but nobody's coming. The MRO involves a lot of money. And if you have to sink such money, you must have guarantee that your money will be safe. Now, a man that is having just 7 to 8 months left, would you want to risk investing such funds at this moment? I think that is what we have found ourselves. What we would not do in the last 7 years.
Why do you think you can do it now?
Do it now in about 7, 8 months. It's better we just face other things, keep your assets, expand them, keep them in good condition, and maybe wait for when the atmosphere is nice, begin to think about bigger investment and expansion.
Are you one of those who would also say this is the time where we need the Minister of Aviation and government at large to also think of how to sustainably support the aviation sector, intervention funds? That's what I'm making reference to right now, because it's difficult for the local airlines to stay afloat around the businesses. And the previous intervention fund we had was just a drop in the ocean at the peak of COVID. What do you think government can do now? The minister said there's no immediate solution, but how do we provide succor?
Well, give them access to the official rate. That's all. That's one of the things I can see now to support the airlines. If the central bank can give them access to the official rate, that would help. Let us make a financial commitment to our partners, so that when they now go out, they are not seen as being creditworthy. Again, there's a need to see how the banks and insurance company can support the aviation sector, because we need to now start doing that at a business, and looking at what rate and the interest rate for funds for the sector. Those are the things I need us to start looking at. I don't want to go into that stabilization fund any further, because even for the airline themselves, they have shown that they've not been able to prove to us that it was helpful.
Yes.
Because nobody reported back to the public what was gotten and what it was used for. So how would I now push for another set of subvention when the last one that was given, everyone screamed, all the media was there pushing for it, and when it came, they all kept quiet.
Let's wrap up our conversation now, Mr. Wayo, with the lines of communication now. Flight delays and cancellations are some of the biggest realities we have to face as we speak today now.
Yeah.
In terms of airline operators and their communication to their most cherished customers now, who still want the best of services and are not looking at the interplay here as insiders, but from the perspective of outsiders, silencing that noise of exploitative tendency and properly communicating, because the customer must be treated right.
Exactly.
Your thoughts on these?
Yeah, you've said it all. Communication has always been a problem, and you notice what happened when Dana stopped, when NCA stopped Dana from flying, and the next thing, the passengers were at the airport the next morning, and they were trying to vandalize assets of both Dana and the airport operator with MM2. I need the customers to exercise some patience. You do not take laws into your hands. Make your necessary reports to the appropriate authorities, which is the Consumer Protection of the NCA, and even the Consumer Protection Council too.
Yes, the FCCPC.
The FCCPC. You can take your reports there, and you find out that this organization are taking care and taking the fight of the consumer on their behalf. But for the airlines, communication remains key. And for those flights that are cancelled, refunds processes must be communicated properly and must be addressed by the airlines. If we ask passengers who come late, who reschedule their flight to pay a fine, then when you do not provide the service, then do the needful. Now the needful is communicate with your passengers, refund their money, and even give them some extra incentives to make them fly you.
Thank you so much for your time on the show today. It's been a pleasure speaking with you, Gloomy and More. And then we just hope that at the end of the day, the resilience the aviation sector has always shown will definitely show up one more time. And then we wrap up the year 2022 on a much more positive note. And this whole lingering crisis of Russia-Ukraine will definitely reduce. And then we have more aviation fuel coming to the country, reduce the cost of operation.
Hopefully, I just hope they can give crude oil to the modular refineries around now, so that they can start refining the aviation fuel. We can't wait till Dangote or the turnaround maintenance of the federal government-owned refineries.
We keep our fingers crossed. Thank you once again. Hello there. Many thanks for still staying with us in Business Nigeria. It's the midweek edition and time to bring you the second part of our interview segment for today. Now, despite negative sentiments that dominated global markets in recent times, investors in quoted securities on the Nigerian Exchange Limited gained a total of 5.64 trillion naira at the end of the first half of this year, indicating that markets year to date rose by 23.1%. Now, amid Nigeria's rising inflation, investors are defying many analysts' expectations as many are not shying away from equities for fund rotation to fixed income securities, as local investors are also increasing their stakes in the equities market due to the attractive dividend yields, capital appreciation in the market compared with the low yield environment in the fixed income market. Well, joining me now virtually to discuss this and much more, I have the Managing Director and Chief Business Officer of Optimus by AfriInvest, Ayode Ebo. Thank you very much for joining us on the show this afternoon, Mr. Ebo.
Yeah, good afternoon, and thanks for having me.
Let's now start with our conversation with a play out of trade and especially an investment within the fixed income market and then the equities market at the start of this year, doing an analysis of the first 6 months. And now we've been ushered into the second half of the year as well. We've seen interest rate hikes as well, and to what extent this is also affecting the market. Let's have your thoughts on the intricacies playing out in the equities market and then the treasury bills and bond market as well.
Okay, thanks. Starting with the equities market, I think our market started on a very strong note. And when you look at the year-to-date performance, very impressive, got to as high as 26%. And if you do like a further analysis of that, you would discover that just about 4 or 5 stocks that accounts for 40 to 50% of market cap are the major movers in the market. For most of the stocks, likely for most of the stocks have underperformed in the market, despite their strong earnings. And the main reason why towards the end of the first half, why we saw the decline in moderation in share prices, and be attributed to the increase in interest rates. So we saw the hike in interest rates, which signaled that interest rate will move upwards. And based on the correlation of both buckets, as interest rates continue to move up, you saw that the equities market becomes less attractive on a dividend yield basis. And that's, we attribute that to the downside or the sell-off that we are seeing now. So speaking to the fixed income market, we saw that the market started also on a very positive note. When you look at the yield environment, it was around the average of about 11-12%. But when you see, despite the anticipation that there would be an increase in yield, based on the expectation that the government will borrow more, also with the expectation that there will be sell-off by foreign investors. So that's we had expected that we would see that translate into increased yields. But the first half of the year, in terms of activities in the bond market, was not really very strong. You will see that rates did not move significantly. When you even look at the last rate hike that was done in May by the CBN, we saw that did not translate into significant movement in yield for the fixed income markets. And the main reason is that we discovered that a non-competitive bid are continue to dominate at the auction, which gives more leeway for the government for them to be able to reduce the pressure on the government in terms of filling their orders. So, but by and large, yeah, we've been seeing this is almost the end of the first month in the second half, and we've been seeing yields trickle up. We know the CBN also moved the benchmark interest rate, that's the monetary policy rate, again by another 1% to 14%, which we're seeing that also translating. Also, investors also in terms of expectation, and we saw that based on the performance, when you do your analysis based on the budget performance, that this deficit would also be very significant. So as a result, that is also impacting on interest rate. And to also just cap it up, despite when you look at the treasury bills market, The rate improves by about 150 basis point after the first MPR hike. But that has not also discouraged a lot of the commercial paper that we're seeing. So we've seen a lot of both private commercial paper notes as well as those that we can assume public that are registered with the FMDQ have continued to issue the papers, which we feel is also positive for the economy. Thanks.
Let's also talk about the perks that exist now, talking about the equities and then the treasury bills and bond market as well now. We're also seeing the Debt Management Office also release the third quarter calendar for this year. And irrespective of all of these interplay, we have to face the reality that this is a heavy election year in a year preceding the year 2023 when we have the general elections all to take center stage. You've made mention of investor sentiment, which are also being thrown up and down here. But what do you think, what will it take really now to woo investors, especially for local players in the country?
Okay, thanks. For the local players, it's going to be a yield game. You look at the interest, you look at the inflation rates as at June at 18.6%, and investors will be trying to see how can they close that gap such that their real return, the negative real return continues to reduce, even if they cannot earn a positive real return. So that's what's going to be in the mind of investors. Secondly, like I mentioned earlier, the budget performance. If we assume the same run rate based on the budget performance as at April that was published last week, we assume the same run rate. That means the budget deficit would get as high as 9 trillion, which is massive. So that also signals that rates are just a matter of time that rates would also improve, would increase, which will be positive for investors. So what we would advise investors at this time is that you should still be playing at the shorter end of the curve and invest in maturities that have attractive yields. They just cherry pick and invest in maturities that have higher yield, but not go significantly long, because we still anticipate that before the end of the year, only a matter of time, interest rates would be up. You see that even the revenue is not even sufficient to cover debt service. So it means the borrowing has to be very significant. The only saving grace or what may reduce that impact, I would say, is that the support from the CBN, which has been captured as ways and means. So if the support is very significant, then that would reduce the amount of borrowings that we'll see, which would impact on rates. So, but by and large, we expect that the direction will be upwards, but it's only a matter of time.
And for investors sitting on the fence and waiting to see what plays out as well, how do you think this pattern is going to also affect their thoughts at the end of the day? There's some level of cautious optimism, which you've highlighted on, and there are those who are just pessimistic.
Okay, for those sitting on the fence, it's also good to look at the cost of funds. So each day, even if you are not investing those funds, each day you are also losing value based on the inflation rate as well as the depreciation of the naira. So you need to at least look for, if you are unable to cover that inflation gap, you need to at least look for investment that gives you that flexibility for you to take it out. I know for traders, this will not be new to them, or for fund managers. Most times you invest in placement with banks that gives you that flexibility to take out your funds when you see opportunities in the fixed income market. Now, speaking to the foreign fixed income market, the Eurobond. So we've been seeing that significant, for the Eurobond, we've been seeing that significant depreciation in the price, which presents opportunities. We know this won't last for long, looking at our current position. So the investing in Eurobond presents opportunities, also helps you to hedge the naira. We all know what inflow dollars is saying, even in the market now, almost approaching 700 naira to $1. That's the unofficial market.
Yeah.
And that would really impact on the value of your investment. looking at investing in Eurobond presents that opportunity. Yields are getting to a north of 14%, 15%, which presents an opportunity for you to earn return in dollars as well as hedge your investment against any naira adjustments.
Okay, now as we're wrapping up the conversation, let's also take a look at the treasury bills and bond market in a holistic form now, finally, as we also see the oversubscription. We had 527%. That was the oversubscription base for the 1 year tenor we saw for treasury bills in the month of June as well. Now, to what extent do you think this really also whets the appetite for those who are looking for longer term investments?
Okay, thanks. You know, for most of the investors are trying to, when you look at the treasury bills market, which is the shorter end of the fixed income market, you would agree with me that the 364 days only active instrument that you have there and move to 7%, and we're expecting that with the 1% increase in MPR again, we may see the auction at the end of today close at between maybe 7.5 and 8%, which it would also be positive looking at where investors are coming from that low of about 4% at the beginning of this year. So, so we believe that a lot of investors will continue to pack funds in that. And for those that want to also go long, that would also impact the rate at the shorter end of the bond market. They would still increase in the rate for the FGN savings bond, which that is accessible to everyone, issued early by next week. That would also, we expect it to increase and also impact on the yield on the bonds market, especially at the shorter end of the curve. So investors should just exercise caution, would continue to see this upward movement. You can also go in branches where you have your funds in placement and continue to take advantage of the increase in yield as time goes by.
So much for your time on the show today. It's been a pleasure speaking with you, Mr. Ebo. And then we keep our fingers crossed to see how the third quarter also plays out. And then as we wrap up the last quarter of the year, 2022, we'll definitely have more of this sort of conversation next time. Thank you once again.
Always my pleasure. Thanks for having me.
Well, it's about that time now where we bring you the closing details of trading activities at the Nigerian Exchange. I have market editor Aviation joining me live in the studio. And also to look at the trading performance at the NGX, I also have investment broker and banker Tajuddin Olayinka. Thank you very much, Mr. Olayinka, for joining us over the phone today.
It's a pleasure. Good afternoon.
Yes, the market is closing negative today with the all-share index down 0.53%. Let's talk through the top gainers and losers for today.
Clearly, we saw a bearish market, just as we saw in the last few days after the hike in MPR. So we saw investors, reacting sharply to the hike in MPR by repricing securities. But what happened today was a large-scale repricing, just like what we saw yesterday. So investors continue to reprice securities in line with new MPR, in line with what they feel the yield in fixed income market will be, and so. That is what we're going to see, and clearly, it's just a very bearish market that we have today.
This is also going to continue as we're wrapping up the last active week for the month of July.
I think we begin to see a moderation because clearly, what has happened just for investors to reprice securities by taking profit. And this also gives opportunity to new investors to come in to take advantage of low prices. So it will moderate, but eventually we will see recovery in the market as yields in the fixed income market continue to stagnate.
Here with us. Well, Aviation, you heard it there. He's talking about repricing and then he's hoping that the market would definitely moderate after a while. What's your thought on all of these playing out?
Bearish run has come to stay in the market. I mean, throughout this week now. This
it's
is
no funny joke.
No, 3 days running now. look at, as at yesterday, MTN lost over 700 billion naira, and today again, MTN is down. Majority of the big companies, they are trading in the lower territories. If I give you the list, there are so many. Talk about Access Corporation, First Bank Group, the GT, MTN, Zenith, Adova. There are so many big companies. And so you see that, as Mr. Tajuddin has said, since the MPR period,
Rate hike,
investors have reacted somehow, and it's like they bring emotion even into the pricing of securities, because it was like majority of them didn't expect it to be, hype up to 14%, and so they had wished it was possible.
It was retained at that 13%.
Yes, that they were able to, buy and sell at the old, price. But as it is now, the market is jolting many of them. And it seems that the conditions are not even controllable.
Do you think the market will continue to bleed as we're wrapping up the month of July?
Exactly, even beyond. Because the factors outside the market, you cannot control. And they don't seem to be immediate solution. Talk about the, freezing of the naira, the value, the weakness. Talk about the inflation. Look at, as at today now, there is a general strike going on within the nation. And that is a disruption of economic activities. Somebody was talking about aviation, issues not quite long from. So how many problems are we handling at a time? All of them, if you put in a basket, investors don't want to pick those things. They are not encouraging. So there's disincentive.
So there's nothing we can do right now to incentivize or excite the market to woo them?
I do not see anything that we can do except those who have, excess funds. Then they can take advantage of the situation because the prices are down. But people are complaining that inflation does not leave them with investable funds. Do you understand? So that's where...
An increased participation of local players is one of the trends we are trying to see
here.
That's
the paradox. So
hopefully we see the
It will take a very long time for markets to rebound.
Yes. Thank you so much for your time, and then we'll do this definitely again tomorrow.
Thank
you, Fingercup.
Thank you.
And now shifting focus to the international front, better than expected results at Microsoft and Google helped steady nervous mood in stock markets today, while bonds and the dollar were on edge ahead of a U.S. Federal Reserve meeting that was expected to deliver another big rate hike. Nasdaq 100 futures bounced 1.5%, and the S&P 500 futures were up 0.9% in Asia after Microsoft forecast strong revenue growth, and Google parent Alphabet posted solid search engine ad sales. European futures rose 0.2%, and London's FTSE futures also rose 0.3%, and Japan's Nikkei rose 0.4%. Things are not so bright elsewhere, with MSCI's Products Index of Asia-Pacific shares outside Japan dropping 0.7%. That's the world's also second biggest chipmaker SK Hynix warned that demand is likely to also slow as customers cut spending, and shares fell by 1.9%. And looking at the state of the Australian economy, inflation spiked to a 21-year high just last quarter and is likely to accelerate even further as food and energy costs explode. Stoking speculation interest rates would need to more than double to bring the outbreak under control. Today's gloomy report comes just a day before Treasurer Jim Chalmers is also due to update the previous government's budget forecast, and he's already warning that inflation would get worse before it gets better. Data from the Australian Bureau of Statistics shows that the Consumer Price Index dumped 1.8% in the June quarter, just short of market forecast of 1.9%. The annual rate picked up to 6.1% from the 5.1%, the highest since 2001, and more than twice the pace of wage growth. A closely watched measure of core inflation, the trend mean, rose 1.5% in the quarter, lifting the annual pace to the highest level since the series began in 2003 at 4.9%. And wrapping up the show today, oil prices on the international market held steady as concerns about weaker demand offset industry data that show a larger than expected drawdown in U.S. crude stockpiles. U.S. West Texas Intermediate crude recorded a price increase of 0.82% to hit $95.76 per barrel. Brent crude now sells at $105.20 per barrel, registering an upward price margin of 0.57%. Bonolite's performance is, however, still in the red territory with a price drop of 3.25%, selling at $118.10 per barrel. And for the OPEC basket, crude oil dealers offer $106.30 per barrel, recorded a decline in price of 1.29%.